Welcome to the daily video update for Monday, January 31st, where we'll look at the action in the markets today and then see how things look for Tuesday, February 1st. It was a pretty positive day. We did see some follow through buying. We're seeing a little bit more strength right now in the large caps rather than in the mid caps and small caps. And I'll go through that in this video and show you how the charts look. There was a little bit of what we call window dressing at the end, where some mutual funds and hedge funds and different money managers, they may buy right at the end of the month to say, yes, we own this stock and this is the price that we got in at. And so that can often produce some buying enthusiasm. It's really more prevalent at the end of each quarter, but it can also happen at the end of each month. Just to make the continued announcement that I've been making, I do have a private Facebook group, and that is starting Tuesday, February 1st. It's free, but it will be moderated. We want to keep some tabs on things that go on because some of these groups can get way irrelevant pretty fast. And you might be the kind of person where you want to participate by actually posting something or giving a comment to a discussion, or you might be the type that just wants to come in and look around and see what other people are posting, see what I'm posting. Either one is just fine. We want to really avoid any of the sleaze factor promotion out there. You know, the Forex people, the cryptocurrency people that send out these spam messages and have this great system that doesn't even exist, and it's really kind of a nuisance. Now, if you have a great deal of knowledge, or maybe you're beginning and you have questions, that's okay. That's what this private group is for. It's just to talk about things, throw things back and forth. Probably most of the interaction will come from me, and as the group starts to grow, other people may decide to interject some things. We want to avoid talking about politics. Now, sometimes what's going on in the political realm can have an impact on the markets. I'm talking about I'm right, you're wrong, this is good, this is bad. We want to stay away from that because we live in a very politically charged environment these days. So we want to keep focused on the S&P 500, but we'll talk about other things too. We want to have spirited and lively discussions. There'll be an opportunity for Q&A as well as live broadcasts. And the best way to contact me, unless you're already on Facebook and you can find me and send me a friend request, is john@spxinvesting.com. I send you the link to my Facebook page, and then from there, I can invite you into the group. So let's go through what happened on Monday. Buying did continue from Friday. And in the video that I posted, I said that things are looking better. We might be pausing before we get ready to drop lower, or we could be forming a base and getting ready to go higher. Well, at this point in time, we've come up out of that base, at least in the S&P 500. There's still talk of anywhere from 3 to 4 to 5 interest rate hikes possible. I watched something over the weekend. Somebody is saying 7 hikes. Well, that's pure speculation. And to say what's going to happen now, 7, 8 months in the future, it's like predicting the weather, because as economic reports come out, as the climate changes, as the focus shifts from one thing to another, that could all change. So just because someone is saying 8 or 9 months from now, this is what's going to happen, it's like a politician saying that's going to save $10 billion over the next 15 years. I mean, it's useless. It doesn't end up working out that way. Doesn't mean they're wrong. It just means that that's pure speculation. We want to base our things on facts as much as possible and what we see happening with the charts and in the environment, the stock environment. The technicals are improving from Friday in through Monday's close. So things are looking a little better if you are long the market. We're still On a short-term basis, we're looking much better. Intermediate term, we're improving. Long term, we're still positive, but we haven't had a big enough shift to change things back. So we're still seeing some weakness over the long term that could be developing. On Monday, we did have the Chicago PMI, the Purchasing Managers Index. It came out. It's not a real big market mover. It was higher than expected. Then we have some more economic reports that'll be coming out on Tuesday, and then others throughout the week, with the big report coming out on Friday, the employment situation report. That's the biggie each month. The current market valuation is that we are overvalued, and the trend condition shows that the trend is still negative. And I base this more on an intermediate term, where the bias, that's more short term, and the momentum have then gone back to being more positive. So let's look at what happened. First, sentiment, we're in about the mid-range as far as the fear and greed index is concerned. We're reading at 38. We look at that in a historical context, and we're right in about the middle. We're not really showing any excessive fear or greed at this time. The VIX, which is another fear gauge, that was a pretty positive day. Here's the chart up here where we broke out with the S&P 500 and closed at the highs. That's also positive. The VIX continues to fall on a closing basis. And another thing that could be seen as positive when we look at the intraday bar chart, as this drops down, you notice that fear is decreasing. Remember, this goes in opposite directions. The more fear there is, the higher this gauge goes. And the inverse is also true. Well, when we closed with the VIX, we closed at the low because we ended up closing at the high with the S&P 500. That can be seen as positive. We're seeing some fear come out of the market. Then we have the VIX of the VIX, which also is declining based on the intraday, or the bar chart, I should say, where we closed right at the low. And then with the line chart just showing the closing price, that also continues to decline. That could be seen as positive. As far as the sectors, we had all 11 sectors positive. And so I've sorted them according to the strongest on the top and the weakest on the bottom. Areas that have been getting hit really hard: discretionary, tech. Utilities have been holding up fairly well. But a lot of the growth-oriented stocks, they really had a good day on Monday. And the staples, which is more of a value play, that was up, but not nearly as much. So we saw a bit more of the money going into growth stocks again on Monday. Is that going to continue, or is this just a short-term phenomenon? We have to just watch it play out over time and see what happens. Here's our sectors, with energy still doing quite well since the high set back in January. Discretionary, even though it had a good day on Monday, is still the weakest. As far as inflation, our BDI, even though it's dropping overall and we've crossed below the moving average, it did tick up just a little bit. We follow CPI on a monthly basis. That gives us the inflation rate and the official rate that is given to the world. Well, this lets us follow inflation more on a day in and day out basis. As far as our technical alerts, we had a lot of positive alerts. The one negative at the very top was that gold had the death cross. The 50 crossed below the 200 moving average. Everything else was positive, whether in the S&P 500, we did cross above 4,500. And a lot of this, the technical alerts, were triggered in the Nasdaq, which has really seen a lot of weakness and had a good, strong day on Monday. If you're bullish, you like that. If you are neutral, maybe we're getting out of this trending environment, so some of your credit spreads may perform better. If you are bearish on the market, you weren't really happy with Monday's action. As far as looking at the intraday chart, we opened up pretty much where we closed on Friday. There wasn't a big gap this time, but we saw buying come in right off the bat. And we drifted sideways. And I think a lot of people that were watching this, including myself, were just saying, okay, we see some strength. Are we going to see some selling into that strength? Well, we drifted sideways. A few more buyers came in. We drifted right along R1. And then everybody was just kind of waiting to see, okay, is this where the selling kicks in, or are people going to keep prices about the same, or are buyers going to come in? We tried to have a little bit of a breakout that came down. And then as I was watching this, I'm like, okay, is this going to lead to some significant selling? We broke down a little bit below R1, but we were able to see some buyers come in, and that took us into the close where we closed at the high for the session. So it was a pretty positive look. And looking back over the last 5 days, we've been able to break out of that range that we were in last week. And it was a roller coaster last week. As far as our daily chart, it's a little bit hard to see because I have the pivot point right here, but this is getting ready to recalculate for February. But we had been chopping sideways and we broke up out of that. We still have some more buying that needs to happen if the technical picture is going to improve, but this is the first step if things are going to improve. We were able to hold above the October lows and then break up out of that after building a base. But you can see other times we built a base back in October, broke out only to see prices fall back. So it looked like a fake out. Well, after that, we were able to regain buying power and we shot the S&P up higher. So be aware of that. Just because we had one good day does not mean everything has now switched. It's looking better and there might be a continuation, but we might see a bit of a fake out as well. And if that fake out has a lot of selling power behind it, we could then continue to go back down. For the year, I'm sorry, since the high in January 4th, we are now down 5.86%. So we're about halfway through 10%, which would be considered correction territory. So we're just seeing a normal retracement at this point from the all-time highs. It could get a lot worse from here. It could get a lot better from here. You can make a case for either side. Then on Monday, we also saw where a lot of buying went back into growth stocks. Those saw an advance where the value ended up having a decline when you compare the two with each other. Then looking at the Nasdaq 100 versus the S&P 500, overall, yeah, we've been going down. The Nasdaq 100 has really underperformed the S&P 500. The Nasdaq 100 is more tech-based, where the S&P 500, it has a lot of tech, a lot of the real big names that really drove up prices in 2021 especially, but it's more balanced overall. So that's why we saw the Nasdaq 100 basically outperform the S&P 500 on Monday. But in the longer term scheme of things, it's still in a downtrend. As far as our trend itself, we're seeing where the red line is coming down. We're seeing the green line starting to come up. So since the red line is on top, that's negative. And we saw just a little bit of a rollover with the ADX right now. If we see sideways to continued upward action as the trend might shift, expect to see the ADX to roll over. As far as our breadth, we saw continued improvement on Monday, not as good as we saw on Friday, but there was pretty healthy advancing issues over declining issues, both based on price and volume. So our moving averages turned up slightly, but they're still, at least based on price, they're still below the moving average. Based based on volume, they're below the moving average. Based on price, they are above the moving average. Our advanced decline ratio, this is looking more positive. We had an extreme negative reading. We're bouncing up off of that, and now the blue line is starting to go above the red line. New highs and new lows. We saw a bit of an increase in new highs on Monday. We're going to have to see a lot more as if we get back into this range here, then you will see a lot of new highs being created. So overall, we're negative, but turned ever so slightly. The moving average is still trending lower. Then this is a new chart, and this is just showing over a longer term period of time when we max out on new lows. You can use that kind of like an oscillator where it shows an extreme, especially with an extreme negative reading. And that's what I'm trying to point out here is other times, and I have a cat that's just doing anything he can to get some attention. So you might hear some noises in the background. Okay, so I'm having to pause the video from time to time as the cat is determined to get on the video as well. But looking at this chart, and this is actually based on another video that I was watching, where we look right here when we set the all-time high back in January, well, that gave us a lot of new highs. And then from then we trailed off, and then we're showing almost an extreme negative reading. What we really want to see, we're still at minus 32 with this indicator. We want to see this as quickly as possible, get back to 0 or above. And that would really help the technical picture a lot. And if you think about it, that makes sense. We have a lot of stocks making 52-week lows. Well, if price can go back up and we can get back to the even point of 0 or above, that just shows that those stocks are starting to see some real buying interest at that point. So I'm going to keep an eye on this, and this can give us some insight as to what is happening. Then the accumulation that we see, this is longer term. I have it on here just to show you that we came back above the moving average, but that's positive that it crossed above. However, it's negative because the moving average has started to go down. So we're going to want to see, if you're bullish, we want to see this blue line continue to go up and the moving average start to turn up as well. As far as our short-term look, the 20-period exponential and simple moving average, we're still below them. But with the sideways movement and then the movement on Monday, we're seeing a little bit of a turn with these moving averages. Short-term, we're seeing a nice bounce after an extreme negative reading. We've turned up with the 50-period moving average, and with the 200-day moving average, we've also turned up. Then we were able to get back above both 200 moving averages, the exponential and simple, and break above that. And now we'll see, can we get above some of these other moving averages that are still above us and might act as resistance? Then looking at the stocks that are above their 50-period moving average, that's bouncing up after an extreme negative reading. It's showing improvement with the 150-day moving average. It's turning up, but it still hasn't crossed back above the blue line, where with the 200-period moving average, that has actually crossed back above. So that's why we're seeing some improvement in these charts, but we need to see follow through if it's really going to switch back to being more positive. The MACD is still negative, but turned up. And the histogram is showing some improvement as well. What we're waiting for is a cross where this dark black line crosses above the light blue line. Our short-term oscillator, after showing an extreme negative reading, is bouncing back up, both based on price and volume. The McClellan oscillator, it's still below 0. So then the Summation Index also showed a bit of a decline based on price, although it's turning a little bit sideways. But this is just showing nice follow through after giving us an extreme negative reading. The Stochk RSI, which is very sensitive, after being pegged negative for a few days, well, now we're getting back up to the point where we might even be extreme positive. That's why I include this as a short-term indicator. Then our rate of change based on just one period, from one day to the next, we really saw that shoot up on Friday. Well, when it recalculated from Friday to Monday, it's actually coming down a little bit. So that means that we might have a little bit more room to run to the upside without getting up too far too fast. When we look at our longer term rate of change, we're back positive with the 5 period. We're coming up out of extreme negative with the 10, extreme negative coming back up with the 20, and the 50 is also turning back up. And then the 200 is also turning back up after giving an extreme negative reading. So when you're looking at how stocks change in price over numerous periods of time, this is showing improvement. Standard deviation, because we went sideways and now we're starting to move back up and everything is recalculating, we're seeing that come down from an extreme positive reading. Now that just means positive in the sense of movement. How fast are we going with the prices? The Williams %R, after showing an extreme negative reading, has crossed above the 50 line, so it's now positive. And then the boom indicator, which had been giving us extreme readings, is now come back up and has actually generated an oversold signal. Intermediate term, with our 50 period moving average, we're bouncing up, but the moving averages continue to go lower. The PMO, it turned up ever so slightly on Monday. And then based on price and volume, it's a little more positive based on price. We went sideways. It's turning just a little bit based on volume. Our other PMO study, those that are showing rising PMOs, that is improving after being extreme negative. The PMO buy signals, they are extreme negative, but turning up a little bit. The PMOs that are above 0, they're still declining, but the decline slowed down a little bit on Monday. This is where we saw a bit of a more pronounced improvement. The BPI, bullish percent index, the number of point and figure buy signals inside the S&P 500 that were generated. We were really extreme negative. Well, with Monday's advance, we saw a lot of buy signals being generated. We're still below 50. And for this to stay positive, we want to see that continue to go up. Our moving average rainbow, the shortest moving average is beginning to roll over, but if we can come back up out of the rainbow, that would look more positive. If we continue to go down and show a real breakdown, then these moving averages will start to cross over each other. Stochastics, short term, were positive. Intermediate term, coming up out of an extreme oversold reading. And then longer term, we're also starting to show some improvement. The RSI, after an extreme negative reading, has bounced back up. Then longer term, the last time we got a real extreme reading with the RSI was during the COVID plunge. We saw that last week. So we'll have to see, can we come back in and continue with renewed buying and continued buying? The vortex, it's starting to get more neutral as the selling pressure comes down, the buying pressure is starting to increase. When this generates a signal, if we continue to go up, will be when the green line crosses above the red line. Here's our summation index based on price. It's still declining ever so slightly, and based on volume actually turned up just a little bit. All of our momentum oscillators are showing some improvement. The slower ones continue to decline, but the ones that calculate faster are starting to go sideways, if not show a little bit of an upturn. The Chaikin money flow, if we continue with the buying, this will probably switch over to green. So we're seeing a real improvement with this indicator. CCI, it's coming up out of an extreme negative reading and is just about ready to cross above 0, which would be positive. The ulcer index, it continues to go up. It doesn't really calculate it in this Friday's and Monday's move yet. So this just shows that the selling pressure is still leading the way as far as the balance. And then here's the longer term look, where we're getting up to extreme readings that we have not seen in quite a while. The Copic is also starting to turn up a little bit. Longer term, we dropped further than we had been in quite a while, but if there's continued buying, you might see more improvement. The Sean trend meter, after showing an extreme negative reading for the first time on this chart anyway, is continuing to show renewed strength. And then the Chaikin oscillator, after ever so slightly giving an extreme negative reading, has bounced up and has actually crossed above 0, which is positive. Some of our trading systems, we're seeing some changes here, and these are more shorter term trading systems. The Elder system has switched to green after Monday. That's positive. And the SAR, the dot is now below the line. And this is pretty good at picking up early switches. Doesn't mean it's going to stay this way, but it's seeing this as much more positive right now. On the way down, it was negative, even after days where we saw an attempted rebound. It still stayed negative. Well, if we go sideways to down, we'll have to keep an eye on this to see if the dot remains underneath the price bar. Some of our different charts, the Heiken Roche Ashi is showing a bit of an improvement. The Kegi chart is actually switched back to black, which is positive. However, the Renko chart remains the same. It hasn't seen enough price action to generate a new box yet. The 3-line break, yeah, it's now starting to define that after our downtrend and Friday and Monday's move. It likes what it sees that way. Equivolume, because we had a positive day, we have a green bar. On one period, we might have gone a little bit extreme, but with the 14 period ease of movement, we're coming up after an extreme negative reading. Point and figure is looking more positive. With Monday's advance, we saw 4 new X's being drawn in here. And then the blue line means we're in an overall uptrend. Long term, the S&P and the equal weight continue to move pretty much hand in hand with each other right now. Our special K, which this takes a long term to move. This is a longer term indicator. We crossed below the moving average. And then longer term, we crossed below. So we're going to have to see some real buying power for this to turn back up. As far as our broad markets, the S&P looks like it's breaking out of that range from last week. You can see the mid caps, they're still in the range, and small caps are still in the range as well. The FANG stocks had a really good day. They were up 5.83% overall on Monday. And those are the real growth stocks. The ARK, it had a pretty good day. It was up 9.46% after just getting hammered since the beginning of the year. The industrials, they're breaking out a little bit. And as the pivot points recalculate for February, we'll want to see, can we get above the daily pivot level and then start to go up into resistance? Or if we break down, are we going to head down to support? And another positive thing here too is the Dow closed above the 200 period moving average. With the small caps, yeah, we're still treading more or less sideways, and we're seeing continued weakness with the 50-period moving average in danger of crossing below the 200. And with the mid caps, also sideways for the most part, with the moving average, the shorter moving average showing some weakness. The Nasdaq, which just has been getting hit really hard these days, it saw a pretty nice breakout on Monday, but we're going to have to see a lot more than this for things to turn back positive. Nasdaq 100, same thing. It's breaking out, but can we get above what has now become overhead resistance? These pivot levels may form resistance. Then the Vixen, as we saw with the S&P 500, as prices went up, the Vixen went down and closed at the lows for the session. So fear is starting to come out of the market, at least on Monday. NYSE Composite, after being in the range all last week, it broke out and is right at the pivot for February. The Wilshire, a little bit below the pivot, but also showing a breakout from last week's range. All stocks, after really going down pretty severely, are showing a nice improvement after Friday and Monday's action. Looking at some international indexes, and these are slow. These don't change all that quickly as far as the indicator that I have here, the KST. China is rolling over, and they're going to be closed all this week due to the Spring Festival. It's the Chinese New Year, and that's their biggest holiday of the whole year. And so things are going to be really slow. Not that they have that big of an influence on US markets anyway, but just be aware of that. We're hearing a lot of economic things coming out of China that may spread or be a contagion into other areas of the world economy. The emerging markets, they're still showing some weakness. Europe is starting to, or continuing to roll over. Japan is rolling over, and the US continues to show weakness. We're going to have to see a lot more than what we've seen so far. Broad market, copper continues to float sideways. The dollar had a really, really good week, closed above 97 at the end of last week. We dropped down and we're back into the 96.5 area on the daily chart, and then we're starting a new weekly chart. So overall, on a longer term basis, the dollar continues to be in an uptrend. Oil, it was up again. We're into the 88 range now. Gold, everybody is so convinced this is the breakout. This is what's going to happen. Does this look like a breakout to you? No, we had pretty solid weakness. This is the cross that was picked up in the technical alerts. And yeah, we were up almost 0.6% on Monday, but we've got a lot to do to get out of this consolidation that's been going on, which could be positive longer term. The longer something consolidates, the more powerful the move will be once it finally gets going. What we have to figure out is that going to be up or down? And then palladium, which I like to follow just because it just gyrates all over the place. It was down slightly on Monday, even though we saw this real spike up last week. Silver, after hitting the 200-period moving average, dropped down, saw a bit of a recovery on Monday. CRB index, it was up 0.9%. So again, this is feeding into some of the inflation concerns. And then going back 1 year in our intermarket analysis, oil has been performing the best. We're seeing a little bit of a turn up with the S&P. The dollar is kind of rolling over a little bit, but it had a pretty good day, or pretty good week last week. Gold is more or less treading sideways, and bonds are showing at least the most weakness over the last year. Then just to look at Bitcoin, it's rebounding a bit, but we're not seeing really big moves right now. I'm still looking at the 30 to 29 level as a major support. We also could see a potential head and shoulders top in here. There's a lot of real negative news coming out about Bitcoin, where the US is looking to crack down, and China and Russia and a lot of countries are saying, no, not here. Well, Bitcoin is supposed to be independent and supposed to do its own thing. I've studied a lot about it, a lot about the cryptos, and the technology is amazing. What concerns me now are so many of the people involved in this have no clue what they're doing. And they just think they're going to throw all this money in and quit their job and it's going to magically go to 100K. Well, they were saying that up here at 68, but look at what has happened since then. So we just keep an eye on this. I find it very interesting to watch. If we get down to that 30 level and even below that, that's where things could get pretty messy if we even get down to that level. There's also the potential of building the right shoulder of a head and shoulders top, but that would be much longer term. That will take a few months to play out. As far as bonds, interest rates were up with the 30, 10, and 5, as well as the 2. So pretty much across the board. I also have another chart. I have a couple of different yield curves. I couldn't think of the word. Yield curve charts that I show. The other yield curve chart that I show that I don't think I have here. No, I don't have that one up. It's showing that the yield curve is going up. Well, when you take the 10 versus the 2 yield, we're seeing some real weakness. And when this starts to get a concern is when we drop down below 0. That means we have an inverted yield curve, which potentially could signal a recession. But we're right now a ways away from that. But we'll keep an eye on it every day. And one thing that's interesting about our world yields is the German bond, may finally be going back above 0. It went negative in 2019 and is camped below that. So we'll have to see, is that going to have any kind of a catalyst for bonds across the world? But we're just slightly back positive now. But overall, bonds continue based on price to fall. So what's our outlook for Tuesday? The bounce may continue. For Monday was positive. A lot of people may want to continue buying on Tuesday. The short term and intermediate term are rebounding after having an oversold condition. The large caps may be breaking out of last week's range, while the small and mid caps are still in that range. So I'm going to be watching the small and mid caps to see if they're positive on Tuesday. Are they starting to come up out of that range as well? That would be more positive for the market. The long-term trend is up, but showing signs of weakness. We're still in the middle of earnings season. The big report, economic report coming out on Tuesday, is the ISM Manufacturing Index. And then in the background too, we have the geopolitical events, Russia and Ukraine. We also have the Olympics coming up, which is not all that big of a deal, but it can turn political really quick, especially because it's in China. So we're kind of keeping an eye on those things as well. So our conclusion based on Monday's action, the S&P is in a downtrend. That's what the ADX is telling us. The short-term bias has switched over to positive, and the bounce may continue. If we go down, this is going to switch back to negative. The intermediate term bias does remain negative, but is showing improvement. The long-term bias remains positive, but is showing signs of weakness. So kind of across the board, we're getting a real mix of our signals right now. So thank you very much. Have a great day. I hope your team wins the Super Bowl after the weekend's playoffs. Have a great day, and I will talk to you again after Tuesday's market close.